every day we sort of react to what's happening in Greece. Lisa raised an interesting question earlier this morning. Do you think markets are overreacting or underreacting? It depends, I guess, on whether or not you think that a potential Grexit is actually a Lehman-style moment or not.
Right. Well, I think the markets have sort of trained themselves to assume that some kind of last-minute deal is going to be made. We had a pretty funny story out looking at the bookmakers in London. And if you want to bet that Greece will stay in the euro, you have to bet £5 to win £1 by the end of this year. So that gives you an idea. You know, in other words, the odds are totally in favor of Greece staying, according to bookmakers. So whatever that's worth. But also today, you know, as far as the stock market goes, you wake up and you look at about $100 billion worth of takeover deals. Granted, rejected, which is not necessarily a bad thing if someone comes back with higher deals, but Williams Company and all sorts of deal talk in the insurance, health insurance.
Yeah, Anthem Cigna. Okay, so maybe U.S. equity investors actually reacting to M&A here and good economic data. But Lisa, I thought it was so interesting what you were saying earlier. You know, I get all this investor fatigue. You know, guests come on the show and say, oh, it doesn't really matter what happens to Greece. It's less than 2% of the Eurozone economy. Why should I care? But you say maybe actually markets are underreacting.
I thought this story was really fascinating. It was about chief executive officers of Peugeot and Siemens and other major European companies saying, we're really concerned about Greece. If Greece leaves the Eurozone, that could be a potential real problem for the economy that's already fragile. I mean, just the concept of a Eurozone, right? You looked at Spanish yields over German yields last week rising to the highest in more than a year because people were concerned about contagion. People do assume, Mike, to your point, yes, that probably they will come to a last-minute deal, but there's a lot of question marks about really what the potential contagion is, and it may not be like a Lehman-style event. I mean, most people say it's not going to be a Lehman-style event. It could be a different style event, though, and I will say that on September 12th, 2008, there was an article about how money markets funds were saying that if Lehman Brothers declares bankruptcy, everything will be fine. I'm just saying, markets don't always get it right, and sometimes, you know, people, it's hard to extrapolate out what exactly would happen. But yes, today is back on with risk on. The moves aren't dramatic in most of the markets, and yet it is risk on because people have been expecting them to come to a deal. And frankly, maybe the Euro finance ministers are saying, you know what, we're not going to risk it, and so we are going to cater to people who are maybe not dealing with us the way we would want them to deal with us by blogging or whatever else, but, you know, or posting things on Twitter. But, you know, this is a big question mark in markets, and people are scratching their heads and saying, what are we missing? Could this be legal?
Yeah, and Mike, you've got to wonder, maybe is the U.S. Treasury market actually really thinking about this? Yes, obviously, every way you look at it, the odds are, or investors are placing their bets that Greece, in fact, will stay in the euro. But if they do actually leave, maybe that changes the timing of Jenny Yellen's rate hike.
It's possible. I think this thing has dragged on so long that obviously people will expect a deal to be made, but if they were to leave, would anyone be that surprised? So people have had a lot.
I think I would be surprised. Yeah, because everyone's been waiting.
I don't know how surprised I'd be. I mean, and if I'm an investor, I think I'd have protected myself in the event of an exit. Jan Loeys, the strategist at J.P. Morgan, had an interesting note, calling it basically a sideshow and saying, look, most of the obligations Greece has in the debt market is to the ECB and, you know, the IMF. Not a lot outstanding debt to private investors. So.
Right. That has been clearly something that the European creditors have cleaned up in the past couple of years. For example, the exposure of, I'm thinking of French, Dutch, Italian banks to Greek debt has been dramatically reduced.
Right. So as the longer this has gone on, the more quarantined we've sort of made the problem. So will there be contagion? Probably. And, yeah, you can't tell where it's going to be, but it seems like the contagion will be a lot less than it would have been, say, 2 or 3 years ago or 5 years ago.
The alcohol maker Remy they're concerned about Greek brandy. So, you know, you never know. You know, they've got a certain kind of Greek brandy. I'm forgetting the name of it. But
Ouzo?
No, it's not Ouzo. No, but anyway, so, you know, there are sort of these collateral effects. I don't know if that's going to cause the market to absolutely tank, but, I mean, there are these sort of little products.
Like 3 or 4% of their sales or something like that.
All right. Greece aside, what are the big market-moving events, and besides the deal activity that you're looking out for this week?
Obviously, I mean, the deal activity today is the big story. It's kind of, you know, and this is when the market really starts focusing on things like Greece, is when there's not a lot else going going on. Obviously, earnings, we still have a couple weeks to go before the earnings season starts, and that's when really everyone will focus back on the bottom-up fundamental information coming into the market. Right now, it's sort of go from headline to headline and really looking for something. The big question on the stock market is we're having a strong day today. We're still not breaking out of that range we've been in all year.
No,
and
S&P's up 3% year to date.
Right,
it's been
right.
A very sideways market.
And, we had a story out saying how bullish the strategists are, and so they're holding tight to their forecast for some pretty good gains this year, but we just haven't seen it yet. So the market's kind of looking for that next catalyst to break it out of that trading range.
I'm watching the inflation data this week. I think that's key. And I think that any economic data that we get that's out of the expected ranges, particularly to the upside, if we get more inflation than expected, that'll cause some turmoil in the bond markets.